Well, breaking up the banks is a big part of this whole debate, obviously, because it gets to the heart of the too big to fail issue, and it gets to the heart of the too connected to fail issue. And unless we solve these problems, we're going to continue to have a banking industry that is in effect subsidised by government. So it's really, really important to crack this.
The banks are definitely too big to fail. There are 145 banks still with more than $100 billion of assets. These banks can't be wound up overnight or over a weekend, which is what needs to be done if there's a problem. The only way to prevent a systemic collapse, to prevent a domino effect of a big bank knocking over all the other big banks, is to be able to deal with the bank over a weekend, shut it down, reopen it on the Monday morning, still trading, but with a cleaned up book.
How could it be done? Well, I think there are probably 4 key things you've got to isolate. The first thing to do would be to take the retail bank and actually completely ring-fence that. So the bit that is to do with lending to customers, retail individuals, and looking after their savings, that should be and could be part of a separate subsidiary, a separate bank, either a standalone unit or as a sort of ring-fence part of a financial services conglomerate. So that's one thing. Second thing that you could pick off is the commercial bank, lending and providing treasury services to industry and to business. That could also be a standalone part. The third thing that banking groups do is investment banking, and I feel that could actually be moved out and split into 2. And what I would like to do is to have part of the investment bank, the part that trades in markets, as a separate business, and the part that advises corporates as a separate business. So actually you've now got these 4 units: retail, commercial, trading investment banking, and advisory investment banking. The advantage of all this is that it completely removes conflict of interest from the equation, and it means that these individual units are less connected, more transparent, and I think easier to regulate. So the current state of competition in the retail banking market is really the issue, isn't it? And it's something that I think really has to be addressed. At present, banking markets in the UK are characterised by a certain kind of rivalry, but not really fierce, open competition of the kind that you might see in the high street in other retail sectors.
People just don't care. They have so little interest that they're very unwilling to go out and research this properly. Now, of course, there are a small group of people who will go and do that, and they're the ones that shift bank, but the vast bulk of people just don't care. And as a result of which, you have a very uncompetitive market. And that's not the only reason the market's uncompetitive. The banks are also forming an oligopoly between them. But the consumers make life much easier for the banks by not moving away. Typically, people only change bank account when their bank makes a big mistake. So, and even then, many people, myself included, can't be bothered. It's too difficult, too much effort, and we're just not interested enough. And this creates a real problem for the government. The government has 2 choices, really. It can either say, we're going to protect consumers from everything, and that means maybe nationalising the banking sector or something, which would be completely extreme and way over the top. Or it has to say, at some point, we draw the line, we accept that consumers make mistakes, we accept that consumers aren't interested, and as a result, they're going to pay more for financial services than they really should. And at some point, we just have to say, that's tough. I mean, what needs to happen with regulation is to break up the banks and to get rid of the problem of too big to fail, of banks being able to trade on the fact that they've got a government guarantee. I don't think that's going to happen. It would appear that the most likely outcome, although not necessarily the outcome, but the most likely outcome seems to be that the banks will be taxed and regulated, and I think in the long run this will lead to another crisis. The banks will find ways around the regulation, and the scale of the taxation is really very, very small compared with the scale of compared with the value of the guarantee that they get from the government.
Where is the next crisis going to come from? Well, it's very difficult to say. One of the things about financial crises is that they always come at an unexpected time and from an unexpected source. If I had to guess, I would say that it's unlikely to occur actually from the mainline banking sector. I think that for the next few years, at any rate, banks are going to be under such a relentless focus from regulators and governments and shareholders that those activities will actually be relatively safe. Where we could get a problem would be that as the securitisation markets open up and risk gets pushed out into the system to hedge funds, to pension funds, to other kinds of financial institutions, we won't know who owns what and where they are, what kind of risk they run. If I had to guess, that I would say will be where the next crisis might come. Let's hope it's not too soon.